How's it going, guys? Bill here again. Got another stock I want to talk about with you. Uh, this stock I want to show you how it's got a huge TAM, total addressable market, and how that's just growing exponentially. I want to talk about how this is one of the leaders in that market, and I want to show you where the future possibly lies with this stock. And this stock is Penn National Gaming, and yeah, I just think it's got a bright future ahead of it. It's already one of the leaders, and its growth is just keeps growing. And with Dave Portnoy over it, I think it's just you know on its way to just keep growing and growing and growing. So anyway, let's get to it. I'm going to show you some things about it, and then we'll probably look at some valuations and financials with it. All right, guys. So first thing is, let's take a look at the market that Penn is aiming for. The online gambling market here. You can see it says the global online betting market is growing 11.5% annually. You see in 2019, the market stood at 58.9 billion. Last year it was at 66.7 billion, and it's estimated in 2023 to be all the way to 92.9 billion. So it's just growing extremely fast. Then you can take a look at here at what is some of the most popular ones, and you can see that sports betting, frankly, is where it's at as far as growth goes. You see that the 93 billion estimated by 2023 is a 40% jump from the value of today. And you can see that the sports betting was just legalized in 2018, so you can see why it has a lot of room to grow, because frankly it's still in its infancy. And we see now that since the Supreme Court legalized sports betting, there's now 25 states that have fully legalized it. And while that's quite a few, that tells you the opportunity is still there, because that's only half the states. So for every state that opens up, that's just more revenue opportunity for companies like Penn. Since the Supreme Court's decision, 57 billion in legal sports bets have been made, 4.1 billion in revenues have been generated, and 571 million has been collected in tax or jurisdiction revenues. And that right there tells you why it's going to be legal everywhere eventually, because politicians, they can't stand to not be able to find something they can tax. So that's just more revenue for taxes for states. So it's just a matter of time. And then finally, these numbers reflect activity in some 20 states. The total count is expected to reach some 40 states in the years to come, brewing optimism towards the industry. So right there, just some obvious reasons why the industry in general, you can see, is just growing really fast. So now let's take a look at Penn itself. So we see that Penn is the nation's largest and most diversified regional gambling company. It has 43 properties across 20 states. Penn operates under brands that include Hollywood, Ameristar, and I can't even pronounce that, L'Auberge. Penn Interactive operates retail sports betting across the company's portfolio, as well as online social casino, bingo, and iCasino products. To bolster its sports betting portfolio, Penn has partnered with Barstool Sports to launch its online sports betting app in several states over the last year. On May 18, Penn launched Barstool in Indiana. Indiana is now the company's fourth online sports betting market, following launches in Pennsylvania, Michigan, and Illinois. So you can see, between it already being the largest and then now with Barstool and having the Dave Portnoy behind it, that it's already has the brand recognition. So people know who it is, which gives it a head start on its competition as is. On October 19, Penn completed its purchase of Score Media and Gaming for $2 billion. Canada-based Score launched the ScoreBet app for mobile wagers in 2019. Penn said the deal will give it access to in-house technology and allow it to broaden its product offering. On May 27, Penn got final approval for the Maryland Lottery and Gaming Control Commission to acquire the operations of Hollywood Casino Perryville. The company struck a deal with Gaming and Leisure Properties late last year to acquire the operations of Hollywood Casino Perryville for $31.1 million. The deal expands Penn's national footprint to 20 gaming jurisdictions. And then on August 12th, Penn announced opened Hollywood Casino York in Pennsylvania. Located in the York Galleria Mall in Springettsbury Township, the casino represents Penn's third facility in the state. A fourth property, Hollywood Casino Morgantown, is scheduled to open later this year. And then we look at some of its earnings and fundamentals. You know, a big advantage Penn has over a lot of the other companies is it is already profitable. They reported Q2 results on August 6th, beating views. It posted EPS of $1.17, swinging from a loss of $1.69 in the year ago period, which obviously was because of COVID that it was down like that, and above estimates for 93 cents. Sales surged 406% to $1.55 billion, also above views for $1.46 billion. So it's just recovered extremely well from the pandemic. And then Penn reports Q3 results early Thursday, so that'll be tomorrow as of this recording. EPS is seen dropping 20% to 64 cents, even as sales are expected to gain 34% to $1.51 billion. Penn's gaming segment, including its mobile sportsbook and iGaming business, increased revenue to $98 million in its fiscal second quarter ended June 30. That's up from $27 million in the same quarter the year before and $9 million from 2 years ago. Sales growth might escalate even faster considering the company expanded to 5 additional states for mobile sportsbook during the quarter. The company planned to complete the expansion in time for the popular National Football League season. The additional states will double its footprint from its current total, still at just 10 states. There's plenty of potential for the category, and that's what has investors excited. They're only at 10 states. I mean, that's only 20% of the country. According to management, the North American mobile sportsbook and iGaming market could be worth $30 billion annually. To accelerate its penetration of the industry, Penn National Gaming acquired the Score for $2 billion in cash and stock. The Score is the most popular sports media company in Canada and the third most popular in the U.S., and the company operates a mobile sportsbook of its own that is live in 3 states. In the best case scenario, Penn estimates the acquisition could bring an additional $1.5 billion in annual revenue and $525 million in adjusted earnings before interest, taxes, depreciation, and amortization, so EBITDA. With so much potential in the segment, it's no surprise that the market will be laser focused on Penn's progress when it reports third quarter earnings. Now let's take a quick look at that acquisition of Score Media and Gaming. So it was just completed, and it cost $2 billion in cash and stock. The acquisition of the Score fortifies Penn National's digital media and gaming strategy, creating a complete one-stop entertainment destination. The Score is the third most popular sports media app in North America and number 1 in Canada. Adding the Score's fully integrated media and betting platform and cutting-edge technology will further strengthen Penn's existing ecosystem and ability to seamlessly serve its customers. Pairing the Score with Barstool Sports provides Penn National with 2 of North America's most powerful and unique sports media assets, with the capabilities to generate best-in-class engagement and enhance customer acquisition and retention across its media and gaming properties. Now let's try and take a look at some of the valuations for it. We see where Penn sits at about $72 with a market cap of $11 billion. And we see it's way down 50% off its 52 weeks highs. And so it's way closer to the 52-week low there. And it has a PE of 22.52. We see that its price to sales is at 2.4. So that's not, to me, the PE and price to sales are not bad at all. We see gross margins are at 50% with a profit margin at 8.9%. A debt to equity at 4.1, that's really good. And operating cash flow at $974 million. Based on cash flow, they have it as a fair value and slightly undervalued at about 15.5%. They have their price to book at about 3.85, which is a good bit underneath the industry of average of 5.24. And we can see here that their profit margin has been steadily growing too. So it's always great to see. We see the analyst price targets are all above where they're at right now, with the average being about $115, which is a nice 59% gain over where the stock's currently sitting at. We see that it has a good strong buying, with 6 analysts at a strong buy, 2 at a buy, 3 at a hold, and 1 strong sell. We look at their revenue forecast, and it is strong. Average 1-year forecast of $5.8 billion, so up 16.22%, 2-year up 20.62%, and a 3-year forecast that's up 25.29%. And then we look at their earnings and revenue history, and we see they're outside of the 2020 pandemic year that their revenue growth has just been a steady increase. All right, guys, well, there you have it. I hope you enjoyed it. Hope that gives you a little bit more insight on it. And, I just feel like this thing has a strong future ahead of it. So do me a favor, please give me a like, maybe a subscribe, a comment, and you guys take care.